All right, we are live. So welcome back to Dapp University. So today we've got a lot to talk about in our live stream. Okay, we're gonna look at a major Ethereum upgrade that is coming down the pike. A lot of the crazy things that have happened in since our live stream we did last week. Again, we do these live streams every single Monday on this channel. Just subscribe, turn on notifications. You're gonna find out about those whenever we go live. We're gonna answer some of your questions and a whole lot more. So if you're new around here, hey, I'm Gregory. On this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to become a blockchain master step-by-step start to finish, then definitely head on over to dappuniversity.com/bootcamp to get started today. All right, so we got people jumping in the chat. We got Automatic Beats, Latricia, Anthony, welcome. Rob, let me know in the chat if you can hear my microphone okay. We had a little bit of a problem with our audio last week, and I just want to make sure that we are all good to go. So let me know in that live chat down there if you can hear my mic okay. Awesome, very cool. All right, so let's jump into this. We've got a lot to cover in our live stream today. Again, we got a big Ethereum upgrade coming in the pike that we're definitely going to talk about at the beginning of this. We've seen a bunch of things move forward in the Web 3.0 space since our last live stream last week. Got a bunch of stuff, especially surrounding Web 3.0 social media. Okay, a bunch of updates with Facebook, Instagram, Meta. All right, with Twitter, all right, also with some Web 3.0 social media protocols coming on the pike. I've seen a couple hacks happen since last week. We actually had a pretty high-profile blockchain developer who was found dead. We'll talk about that as well. Look at the crypto markets. Seen some significant price action over the past week. We'll talk about all that and where this space is headed. So let's jump in and start talking about Ethereum because we've got a lot to cover today. We'll go ahead and jump into this. So we have a major upgrade coming down the pike for Ethereum. So what is it? What does it do? Why is it important? Why should you even know about this? Okay, so Ethereum, of course, is the most popular smart contract development platform. It's number 2 cryptocurrency by market cap. If you check our website like CoinMarketCap, CoinGecko.com. All right, it's got the most developer activity on it, the most users. And it is undergoing a long roadmap towards its final form, okay? Formerly called Ethereum 2.0, now just called, Ethereum itself. That's just constantly getting upgraded over time until it reaches its desired state. Again, the whole idea with Ethereum is putting a product out there, or essentially not a product, but a blockchain out there that basically could get users quickly and then develop network effects and then sort of fix the engine to the plane while it's flying over time, as opposed to Bitcoin, which basically is whole designed to get out there and do kind of the same thing with some minor updates for security reasons and things like that over time. So anyways, we saw a major upgrade to Ethereum earlier this year, all right, when Ethereum switched to proof of stake. It was formerly a proof of work blockchain with miners. Now the consensus engine for Ethereum has been swapped out to proof of stake, where basically validators lock their cryptocurrency up in the network to earn a passive income reward for doing that. Okay, but there was one major drawback to that. Excuse me, sorry everybody. Was that essentially you could not withdraw your staked Ether from the chain, all right? And you might have seen this where if you've kind of gone to a staking pool or something like that, or maybe you've put your ETH on a website like any exchange that offers staking, like they have this big warning that's like, okay, yeah, you can deposit your stake, but you can't get your money back yet, right? So this has kind of been a big red flag for a lot of people. It's deterred a lot of people from staking either on these apps or with the Ethereum network itself natively, okay? And the big upgrade coming down the pike really soon is actually going to fix that problem, okay? So that's what the Shanghai upgrade is all about, all right? So basically, we had the merge. That's what came in, where we essentially had the beacon chain and merged to the main Ethereum chain that's using now that enabled, this thing to happen, enabled proof stake to happen. And now we have this post-merge cleanup period where essentially, we have this time where any changes that need to be addressed with the merge can be addressed. And then also one of the big benefits from this is going to be the ability to withdraw staked ETH. Okay, so that is coming down the pike. Definitely watch out for that. It will be here sooner than you think. It seems like the merge was even so long ago at this point, but here again, we are at this point much faster than you might realize. Now, that being said, let's talk about some other updates that are coming down the pike for Ethereum, because if you want to go look at the Ethereum roadmap, you can go to the Ethereum org.org website and look at all the different things coming down the pike for Ethereum beyond, the Shanghai upgrade. We have the big upgrade for Ethereum, which turns on sharding. Okay, that's actually going to help some of the scalability issues with Ethereum itself, although that is not the long-term solution for the scalability benefits we can get right now with layer 2 scaling solutions. We can talk about more of that at the end of the live stream today if you want to, but sharding is something to watch out for potentially next year. All right, it's shipping estimated 2023, 2024, but the whole point is, Ethereum could really be here in its final form. Not necessarily final form, but let's just say 80%, 80 to 90% there within the next 18 months. That's actually pretty big. Okay, that's actually pretty big. So anyways, definitely keep an eye out for that. All right, so now let's look at a couple of other things that I definitely want to talk about. Let's switch gears to what the developments in Web 3.0, because this, despite, everybody, on the grand scheme of things kind of checking out and not really watching this space because the crypto markets have been quiet, the space is still forcefully advancing, all right? I was here in 2017, 2018, 2019, after that major bubble popped, and then people sort of just evaporated from the space. Or I started my YouTube channel in January 1st, basically January 1st of 2018. I watched, like a really fast, influx of traffic, and then people just like not really care about it anymore. So I've been here through all these cycles before, and during that last cycle, we were laying the foundation for what was next. DeFi was still an idea in people's heads. People weren't really using NFTs yet, although they existed. People didn't think tokens were going to matter anymore because we just had ICOs, and those kind of all fizzled out. People thought crypto was dead, never coming back, but were they sorely disappointed when it did? All right, it came back with a vengeance. All right, what we saw over the past 2 years was absolutely insane. You would have had a hard time convincing anybody that was a future reality at the end of 2018. Feels kind of like it does now, although it's pretty different because, right now, I think most of the people are just kind of thinking, hey, when's this thing going to come back? Not, is crypto never going to come back? Is like, it just when. So anyways, let's look at a lot of the technological advancements, because this time is different in a lot of ways, which a lot of this technology is getting adopted by much bigger people, okay? Before, it was mostly like insiders in the crypto space building things for other crypto people. DeFi was built for crypto users. It's like, hey, here's the ways to do finance, like lending and borrowing, all stable coins for people who already have crypto wallets and understand things, but really we're building on-ramps for people who, don't really use blockchain right now, okay? And that's what's really big about what I'm going to talk about next. So anyways, let's look at this, because this past week, we had some pretty big developments with Instagram and Meta, all right? So basically, Meta is now essentially letting people, list, buy, sell NFTs on the Instagram platform, okay, completely with blockchain. So they are partnering with Arweave, okay, for the decentralized file storage aspect of this. They're also supporting the Polygon blockchain, okay. So I'm telling you, like, if you've been in 2018, I know Meta technically didn't exist back then. That's when Facebook was the parent company of, Facebook, Oculus, Instagram, all that type of stuff. Actually, I can't remember when the Facebook acquisition of Instagram was. But anyways, I get some of those timelines mixed up in my head. But if anything like this had happened, during that time, it would have been absolutely insane. Likewise, if any of this had happened during the froth of last year, let's say this had happened in October of 2021, when NFTs were still on a pretty big tear, like it would have been nuts. It would have been absolutely nuts. So anyways, this is huge. Instagram moving forward with NFTs, supporting the Polygon blockchain, supporting Arweave. That's a pretty big step forward. So I think NFTs can have a pretty big part of Web 3.0 social media. One major aspect of this, beyond just digital collectibles, okay, is also things like identity verification. That's one way we can help fix Web 3 social media, which is going to move on to my next thing. All right. So, the next big topic is definitely keeping up with what's going on with Elon Musk and the Twitter acquisition. Okay, now some people think like, hey, why does this matter? Like, what's this got to do with crypto? What's it got to do with blockchain? Well, there is a correlation here, and it could be a profound relationship, okay? Because, we've been following the Elon deal for quite some time. Elon put some breadcrumbs out there on Twitter, talking about, essentially, should the Twitter algorithm be open source? That's a very Web 3.0 value, although it's not just about using blockchain itself. There's some leaked text messages from the court cases talking about how he initially had, talked about using blockchain for some type of features on Twitter. And it looks like this deal is continuing to go forward, all right? We're kind of following some potential breadcrumbs on how we could see this, because I do think Twitter is a great candidate for implementing Web 3.0 stuff. Now that if Elon's going to completely own this thing, it's going to be private, okay? And, we can start to do things with it that previously would not have worked, and talking about having a board, shareholders that you're beholden to, all that type of stuff. This could lay the groundwork for some pretty, what I would call radical experimentation, and actually using blockchain to help, fix some of these problems. Some of those problems could be the spam bot problem, okay, basically using blockchain for human identity. We're already seeing that with the blue check marks. Basically, we're seeing blue check mark come back as a service, basically, where you can essentially buy one, you can lease one essentially for a certain amount of money per year. Now, we could see this type of thing, basically become an identity management system where you could sort of rent this identity and you could use it across the web. And let's say that you could issue that onto a blockchain. That could really help this problem cross social media platform. Okay. So another aspect of this is we see Vine coming back. Okay. So I don't know if you saw Vine back in the day. It was a video like looping things like way before Instagram stories, way before TikTok was even an idea. I believe Vine even predated Snapchat. So it was like an early video sharing platform, short form content owned by Twitter. It got sunset, maybe probably 5 years ago, I want to say. But Vine is coming back. And so we'll see if this has any part in the grand picture of that. Yeah, we'll talk about FTX towards the end with the sort of crypto market segment. So another thing to keep on watch out for in terms of Web3 social media is what's happening inside, okay? So, definitely keeping an eye on what's going out with the Lens protocol, okay? So this is a Web 3.0 social protocol, okay, that has all these types of benefits where essentially you can manage your identity on-chain, okay? You can basically build different social networks with the same protocols. Where let's say you had a video sharing service like YouTube, or let's use something different. Let's say you had a content platform like Twitter, and then a video sharing service, short form content like TikTok, for example. Those are two very different platforms, right? Although Twitter may be going through some sort of evolution to try to marry the two, maybe with Vine, but let's just keep them at their current state, right? Let's say you built a following, or not even as a content creator. Let's just say that you were following a bunch of accounts, and when you started a new platform, you didn't want to start from scratch. Well, because your identity is managed, on chain, and you're a user of the entire blockchain, not just each individual application, your social graph, as in the people you follow and that follow you, can just move with you from app to app. All right, your username is like a part of everything. So there's a ton of big benefits. Like as a content creator, you wouldn't have to build an audience from scratch if you move to different platforms. Also, you as a user, you wouldn't have to find everybody from scratch if you wanted to start on a new protocol. So Lens continues to gain adoption. We're seeing new apps built with Lens. Okay, you can kind of watch some of the statistics. Usage statistics continue to sort of trend up and to the right over time. Okay. Of course, this is a cumulative graph, but it won't go down. But you can still see like the steady and consistent growth over time. We have 83,000 profile owners, 80,000 single profile wallets. Okay. Yeah, we're seeing lots of this continue to bloom. And, one of the hot topics with Web3 social media, of course, is censorship resistance. And that's a big benefit of using blockchain for actual publication itself, is that you could create, censorship resistant social media posts that could not be taken down. Now, I know there's a big argument around censorship. Like sometimes you want censorship, in your applications because you don't want to see certain type of content, or maybe you don't want, children seeing certain types of content, or just certain types of content able to be published because it exploits other people, right? Well, there's always ways that you could implement that and have some competition at the app layer, all right, where users could choose in between applications if it didn't fit their values, and then essentially, that could solve that problem through market competition within the centralizing forces, okay? All right, so let's move on to a couple of other things. We did see an unfortunate event happen within the last week, okay, which was the co-founder of MakerDAO, unfortunately found dead in Puerto Rico. Okay, so this was a developer. Contributed to multiple projects, including MakerDAO, BitShares, Balancer. Okay, so basically, he was found dead due to a drowning. Being dragged by sea currents on the Condado Beach in San Juan. The local paper reported basically has no vital signs by the time his body was rescued. Okay. So, there's a lot of talk, going around this. I don't really want to get into all the specific details. I mean, you'll have Google, you've got social media. You can kind of go down the rabbit trails of what the possible implications of some of this are. Okay, I'm not really going to indulge some alternative explanations or conspiracy theories, and I just really don't want to get into it on this channel, okay? But definitely, if you want to go look at all that type of stuff, you can. People have asked me about this personally, and so I wanted to kind of talk about in this channel. Mostly in the intersection of like, hey, if you're a blockchain developer, should you be concerned about your own safety, for whatever reason, okay? Either for, being like arrested or getting hurt in some way, based on something. So it's a good question to ask. I'll kind of weigh on this. People talk about the arrest sort of situation because we did see, the arrest happen with the developer Tornado Cash in the Netherlands. Okay, then we see, this really unfortunate death here, and kind of people are wondering about that. So anyways, I'll give you my thoughts on this. So number one, a lot of it has to do with like the first of all, you really have to ask yourself, if you're just like a developer and you work at a company, just you're hired, or you're like an independent contractor or something like that, and or like you work on a pretty low profile project and you're like a kind of a cog in a wheel and like somebody's always telling you what to do, you probably don't have anything to worry about like for any of these types of concerns, okay? Now, that being said, if you are an extremely high-profile developer on extremely high-profile projects and people know that you have influence over large amounts of money, that's a potentially different story. But for the vast majority of people watching this video, like it's not going to be a concern like at all from either an authority's perspective or like your own potential safety. And, as many of these kind of like outlying examples are, we have as unfortunate stories. Think about all the people who meet the exact description I just talked about who have been completely fine. I mean, think about a person like, Vitalik, who walks around, goes to conferences, has been fine out in public. All right, this person has an extremely high amount of influence, an extremely high amount of responsibility, an extremely large amount of wealth. Okay, so there's definitely counterexamples of people who have never, at least to my knowledge, had any significant problems. So just some things to think about in terms of that. So, all right. Anyways, moving on. Let's look at a couple other things in terms of the crazy Wild West version of crypto. All right. So crypto is a Wild West place. We see some crazy things happening with the developers. We see crazy things happen with hacks all the time. Okay. We see a bunch of Bitcoin just seized from Silk Road. Okay. So anyways, speaking of hacks, last week we saw crypto exchange Deribit's hot wallet hacked for $28 million. All right. So what is this? So a hot wallet is basically, their wallet that enables, withdrawals for user funds. Okay. And this was compromised. It's basically the Deribit hot wallet was compromised, but client funds are safe and losses covered by company reserves. The hot wallet was hacked for $28 million earlier this evening, just before midnight UTC on November 1st, 2022. So basically, all the cold storage addresses were not affected at all. Basically, the hack is isolated and quarantined to our Bitcoin, ETH, and USDC hot wallets. All right, so this looks like they will have to, eat the cost. Looks like there's some type of insurance, type of thing. They said the insurance fund is not being impacted. The loss will be paid by company reserves. Okay, so Deribit remains in financially sound position. Ongoing operations will not be impacted. So to my knowledge, we have not publicly tracked down the perpetrator of this type of thing, but if you were a user of Deribit, looks like you don't have anything to worry about. Yeah. All right, so now let's talk about the Silk Road Bitcoin seizure that just happened. Excuse me. So basically, U.S. Attorney announces historic $3.36 billion of cryptocurrency seizure and conviction in connection with Silk Road dark web fraud. Okay, so basically, the U.S. just seized $3.36 billion in Bitcoin from a guy who stole 50,000 Bitcoin, not $50,000, but 50,000 Bitcoin from the Silk Road 10 years ago. Okay. So the dude was just hanging out at his house in Gainesville, Georgia for 10 years with billions of dollars in stolen Bitcoin. So that's pretty crazy. So if you have to know what's going on here. So basically, what is Silk Road? It's basically the marketplace of the dark web. All right. So Silk Road is like a, historic trade route. That's kind of where the name came from. All right. It was sort of like the early place to, basically trade illicit products and services over the web, all right, and on the dark web. And honestly, that's one of the main, not one of the main, but it was a common use for Bitcoin in the early days to basically pay for illicit goods and services. That's one of the reasons you have sort of this reputation of, Bitcoin, that's like for, drugs and criminals. You know what I mean? Like that's kind of where that reputation comes from. So, not gonna lie, there was definitely a lot of that, particularly in the early days. Still some of that happening for sure. So anyways, you want to talk about the Wild West, like that's the Wild West for sure. And we have somebody who stole, 50,000 Bitcoin, worth 3.36 billion today, and has been sitting on it for 10 years. That's pretty crazy. So you want to talk about, some diamond hands. So maybe, I'm sort of the opinion that Satoshi, whoever that is probably dead, because at this point, they would have sold some of that Bitcoin, some of that sweet, sweet Bitcoin. But, maybe this is a good counterexample to say, maybe not. Maybe there's somebody is far more diamond-handed than this individual who's been chilling on, over $3 billion of Bitcoin, which was worth, ostensibly closer to $10 billion at the peak of the bull run. All right. who, I guess at 10 billion was not selling. All right, so let's look at let's go ahead and look at the crypto markets. All right, look at what happened last week and also the week going forward. All right, so basically crypto prices are the exact same as what I pull up on my screen, exactly 1 week ago today. It's no surprise. Honestly, we're kind of in this sideways chop for a long time. But, in one sense, that's kind of a good thing if you have a long-term outlook, because it means we're not just on a steady downtrend, all right? If you look at the past 90 days, all right, it looks like we do have some significant support getting put in at these levels, especially if you put the past 180 days, all right? And we have seen a little bit of, positive price direction over the past 7 days, which we have not seen in quite some time. This is our first time to break above, $21,000 since, early September. All right, we haven't been back up here. We were in there August. Okay, so anyways, that's what's something good. So one thing to understand is we are now 1 year away from the top. All right, that's actually pretty significant. Okay, so if you put in 1 year, all right, you can basically see like 1 year and like 1 day. Let's see what's today. Today is the 7th. Yeah. November 8th was the Pico top. All right. November 8th was the tippy top of the 2021 bull market, at least for Bitcoin. All right. Definitely other cryptos put in their tops after that. ETH was shortly after that, or lots of other altcoins put in shortly after that. So 1 year is definitely very significant in terms of, a downtrend. If we're going to compare that to previous cycles, okay, and we look at, here, let's see, our previous top was December 15th, 2017, and our bottom, or at least this big puke here, happened, within a year from that time frame. And ultimately, we found a generational bottom a little bit after that, right? Maybe it's hard to tell. I don't know exactly where the low is, but there's some rough analysis that kind of shows you, what that is. Now, why is it significant? Well, first of all, we are seeing basically, a shift from a complete bearish market to more of a neutral market. All right, over a 90-day time frame, 180-day time frame, something like that. Go back on 90 days. This looks a lot more, maybe not 90 days, but let's say like 70 days. That looks like a lot more neutral market than a complete just bear market. So that's at least a step in the right direction. Now, in terms of when could things get actually, bullish again and start making an uptrend to, new all-time highs, which I do think is just a matter of time. I think it's a matter of a matter of when, not if. Okay. So, that in order to do that, really one of the biggest factors is what's going on with the broader economy. So, let's look at what happened last week. And what's going to be happening this week. So we did see a Federal Reserve meeting last week, all right, talking about interest rates. Because again, why are we talking about this? Basically, the macroeconomy and the policy from the central bank of the United States, one of the biggest impacts on the crypto markets right now is the same thing with stocks. Crypto and stocks are pretty highly correlated, although crypto has been a lot more neutral than the stock market has recently, which has been a good thing, okay? So we did see out of the meeting last week, more rate hikes, which is honestly kind of expected, 0.75% or 75 basis points. That's within people's expectations, all right? Now, the big surprise that came out of it last week was it looks like we did see a little more hawkish potential outlook on the terminal rate, and that we might want to see higher rates for longer, okay, to get inflation under control. Inflation's the enemy. But we have seen also talk of fewer or maybe smaller rate hikes in the future, okay, either smaller or less frequent, or maybe a combination of both. Now, some people freak out about the prospect of high interest rates for a long time. I mean, historically, like, we've had much higher interest rates than what we are currently in. I think, honestly, a lot of the big impact on the markets is not the actual interest rate itself, but the rate of change. The fact that we went from a extremely low rate environment to a not so low rate environment very, very fast. The fastest. I mean, I'm not an economic historian by any stretch of the imagination, but just my quick cursory glance to the past 50 years, this is not a common occurrence, okay? And, really what we're experiencing is sort of the economic shock waves of that type of change, and the rate of change is the biggest factor here. And if that seems to slow, even if we are in a, higher, air quotes, rate environment for some time, that can still eventually sort of even out, and we could see some progress in the right direction. So that's what I would personally like to see, which that could very well happen. All right, let's look at, that's what happened last week. Now let's talk about, what is on the table for this week. So some of the biggest things this week, we do have a CPI read, I believe. Yeah, we'll see. Hold on. Is it this week or is it next week? Let me look. Hold on. It's either this week or next Monday. So basically, reading for the consumer price index is the next thing to look out for in terms of the big macro stuff. It looks like that may actually be next Monday. It's supposed to be November 14th. Today's the 7th, so that'd be next Monday. It's either this week or it's next week. But definitely watch out for that. The other big thing happening in terms of, the U.S. is the midterm elections are tomorrow, okay? So, it's not as big as a presidential election for sure. Presidential elections typically have a significant impact on, financial markets. But, if there's any major surprises with the midterm elections tomorrow, okay, then we could see some sort of short-term or even long-term impact on the markets. Now, there's also the thought that the market is sort of artificially been propped up ahead of the elections to try to influence the outcome, and that a lot of that effort could essentially evaporate, after the elections. We'll see. We'll see if there's any truth to that. There's lots of people who are expecting a major dump after the elections, so that some of that, artificial effort can go away, and so to, give you that short-term benefit, but not compromise the long-term as much. We'll see if that ends up being a total conspiracy or if it's actually true. Somebody says, Strange Shot BTC is still perfectly sitting at 20K. Yep. Somebody says, when the government votes take place on chain, will it be on ETH? Well, we'll see if they start voting on chain. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. They really helps these videos out so that more people can learn about blockchain. And if you're as fast with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe it's like a master shortcut entirely, I can master blockchain step-by-step start to finish over at dappuniversity.com/bootcamp. You have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching.